Thank you. Hello, everyone. As you could guess from my introduction, I will unfortunately, or maybe fortunately, not speak about the legal aspects of the Motor Insurance Directive and the legal changes that are to come, but I will nevertheless try to make it as interesting as possible. I will share with you some thoughts about the implications of cross-border MTPL business in terms of claims handling and financial stability matters. Ironically, ironically, yesterday when I arrived and when we were driving from the airport, we had to take a detour from the motorway because of a very large accident. The driver, I think he told me there were 14 vehicles involved. Now, I might have misheard the number 14, but it was quite a large accident. The motorway was closed. Everyone had to take a detour. And as we were driving here, I was thinking, how many foreign vehicles or foreign victims could be involved in this accident? And what does that imply for the multiple involved parties? But to start with a higher up overview, you all know about the green card and the protection of visitor systems. The protection of visitor system in 31 countries and the green card system in 47 countries where continuously cross-border MTPL claim handling occurs. And just to give you an idea about the numerical scope of things, what I will say in this presentation is mostly steered towards the green card system, but most of the concepts apply as well in the protection of visitor systems in the system and the MID. But to take the sort of the grander view, we're talking about 48 countries with almost 500 million vehicle fleet, where annually over almost 500,000 cross-border accidents happen. And we're talking about hundreds and hundreds of insurers involved together with the national bureaus, guarantee funds, and the Council of Bureaus as the overseeing entity. Now, when we look at these countries who are members of the green card system, we see a huge diversity. First of all, a huge diversity of scale. You have countries with vehicle fleets that count in millions. You have smaller countries with vehicle fleets less than 100,000. And likewise, you have countries with a vastly different scale of premiums. Nevertheless, they have come together in one club, in one organization, works with one common system of rules, which brings about certain challenges. Now, when I spoke about the larger system-wide numbers, it's not always obvious, but if you think about it, 450,000 accidents a year means more than 1,000 accidents every single day. And each and every accident creates cross-border cash flows between insurers, claim handlers, and eventually the national bureaus involved. The problem is, or the challenge is rather, the word problem may not be the correct one there, is that these cash flows do not always match in time and space. Or I should say they almost never match in time and space. Why? Because each and every country, each and every market has their own risk profile. Some markets are more exporting accidents, some markets are importing accidents. In each and every country there are different laws and different rules. Almost always, 99% of the cases, the law of the country of accident applies, which means if the insured of insurer A in country A causes an accident in country B, the insurer needs to be aware of the compensation mechanisms in all of the countries where their fleet circulates. And because all of these frameworks are different, that causes extra complications on the financial flaws, on the financial flows between the insurer and their correspondents, their claim handlers, both time-wise and scale-wise. Now, excuse me. Now, just to give you an illustration of why this mismatch happens, I'm aware this slide is not hugely legible, so I've kind of created a crop of it, a snapshot of it, sorry, where you can see that if we take individual countries, when I was talking about exporters versus importers of accidents, you can see that in almost no case, two countries equal out or net out in terms of the numbers of accidents that they import and export. Here you see the horizontal country codes are the, let's say, the countries of accident, and the vertical country codes are the countries where the vehicles originate from. And you can see that there are quite large discrepancies in terms of the numbers of accidents happening throughout the year, originating from one country and happening in another. And this is another snapshot of three individual countries in terms of the accidents exported and imported. Here you can not only see the difference between accidents exported and accidents imported, but also there's an interesting trend visible there, that this gap is ever increasing over time, which is, of course, a normal consequence, an expected consequence of the economic integration, of freedom of travel, freedom of movement, and so on and so forth. Now, not only frequencies are different, but also compensation levels are different in various countries. And for each and every market, for each and every insurer, it depends that the needs for financial resources and liquidities largely depends on where your portfolio is traveling, if I may say so. Another way to look at this is this summary table of compensation levels, excuse me, minimum amounts of cover in each and every country. You can see that even within the EEA there are vast differences. If a Romanian vehicle goes to, I don't know, excuse me, Sweden and causes an accident there, the compensation can be as high as 30 million euros. If it's in another EEA country. Now, of course, EEA countries are more or less converging in terms of amount of cover, but the contrast is even higher if you look at the EEA versus non-EEA. Now, I gave you the example of Sweden. I don't know how many Romanians or how many vehicles from the region would travel to Sweden, but on the other hand, if your insureds go, for example, to Moldova, their compensation levels, at least compared to Sweden, are significantly lower. Now, a correction, these are the legally fixed amounts of cover, not the claim amounts. This is a map, sort of a schematic description of the average claim amounts. An additional complication is when, for whatever reason of malfunction of the market itself, bureaus and guarantee funds have to step in. They not only have to step in with liquidity in certain cases and then they will recover it from the market, for example, when an insurer is late on compensating the correspondent, but in certain cases they are also the ultimate paying entity, which means they have no source of recovery virtually. This is, for example, the case of uninsured driving or false green cards if we're speaking about the pure green card non-EEA countries. On the other hand, the whole system, the market and the bureau's guarantee funds themselves, are being financed based on the premium they generate. And the question is, well, is this always enough? That question is one that does not have a clear answer, but it's a question that is always useful to keep in mind in terms of financial stability. Now again, just to recap what we've said so far, multiple accidents, multiple levels, and multiple roles of entities involved. The system works on the principle of pay first, argue later. There are vast differences from country to country, which means cash flows don't match in time and space, and this creates a need for liquidity at all times and at all levels. There are additional challenges. Now, we spoke about the pay first, argue later rule. There's also the concept of the handling autonomy of the claim handler in a classical green card accident. The law of the country of accident applies. The correspondent is best placed to know this legislation. The correspondent acts on behalf of and in the interest of the insurer, of the liable insurer. There needs to be a certain amount of trust and a certain amount of autonomy on the side of the claim handler in terms of making decisions on matters of liability, indemnification, and eventually court cases. Another current challenge that the system now is facing is insurer insolvencies, MTPL insurer insolvencies, which puts a strain on the market of the insolvent insurer itself, because all of the, let's say, the residual risks that we spoke about have to be financed by the rest of the players who did and did not die, speaking in terms quoted earlier. But also, it creates a financial strain on the other players, such as the claims handlers, because they need to be compensated for their outlays on time. Now, an additional complication of this is the FOS/FOE activities, which are, I want to say, quite popular, but they also bring additional complications in terms of the discipline and the financial capacity of an insurer acting in a host country, operating in a host country. What makes it even worse is that sometimes these entities do not have substantial business in their home country, which makes the principle of home supervision even less viable. What does that mean? That means we have more risks in terms of financial stability there where we have FOS/FOE involved. Now, this is not official statistics, but we, last year, I believe, we made a study at the Council of Bureaus where we drew an initial conclusion that insolvencies of FOS/FOE entities are about 3 times more in terms of their market share than the general market share of FOS/FOE business in MTPL EEA-wide. There's a general assessment of, I believe, AOPA that FOS/FOE MTPL business is around 5% EEA-wide market share. We found that for 10 years of time span, from 2007 to 2016, I believe, the market share of FOS/FOE entities going insolvent was almost 15%, so 3 times different. Now, if you add to that their domestic activities, the market share of insolvencies related to FOS/FOE is in the range of 40-something%. Last but absolutely not least, the pricing and the premium environment is a very important factor in terms of financial stability of the markets. Now, we'll come back to this point a bit later. The issue is more challenging for this region, for the Central and Eastern European region, for a number of reasons. First, because the region is sort of what can be said above average risk in terms of the fact that these countries export more accidents then the share of their vehicle fleet in the system is. So roughly speaking, the frequency of accidents coming from Central Eastern European countries is above average. On top of that, they're large exporters and they're very small importers of accidents. So this creates an even more strain on the liability and solvency needs. Finally, what is important is here for insurers of this region, we are more often, or you are more often dealing with larger exposures because there's a vast circulation of vehicles originating from this region in countries with comparatively higher indemnification levels, which means not only the frequencies are higher, but also the severities of claims will be higher. And of course, I touched on this again, for various reasons, we are dealing with lower premium environments in this region than compared to, for example, Western or Northern Europe. To conclude my thoughts, just a few points of additional conclusions, apart from the main conclusion that financial stability is important. Financial stability is finally conditioned with the financial health and ample liquidity of all players. This includes insurers and claim handlers at all times. It's conditioned on the good financial and legal discipline of the players, including timely and correct communication between themselves, especially about change of reserves, which entails, of course, in the first place, appropriate reserving practices, reserving standards. It includes good awareness of indemnification rules in various countries where, like I said, an insurer's fleet is circulating. And most importantly, sound actuarially justified pricing practices, which is not easy. It's easier said than done because, especially for an EEA country, you're dealing with a single premium which has to incorporate the risk for the whole EEA territory. For pure green card countries, non-EEA countries, it's perhaps more straightforward to estimate the risk, but for the EEA white cover, it becomes more complicated, especially, like I said, for markets which are characterized with a lot of circulation in higher indemnification countries. Excuse me. And of course, the inherent issue of let's say portfolio selection or risk selection in terms of what kind of portfolio you build for yourself. We know that there are good portfolios, easier portfolios, and portfolios that can create, if I may say so, headaches or large or frequent claims. This will be it for sort of an opening reflection for today. I wish everyone a fruitful conference, and thank you for your attention.
If there's question, because you will not be on the panel, and the topics you touched
I wasn't
are
sure
very...
if I'm allowed to say that. If there are any questions, please feel free.
Because if you don't, I have a couple of questions and statements. First of all, what worries me a lot is that FOS is misused. So I don't think it is just, oh, we are unlucky and getting bankrupt. It's really catching the money and run. And what I see is, because the people who did it before were not punished really, that this gets worse and worse and worse. I think we're just at the start. So if we don't put those guys into jail who do that game, we're going to have a situation where the freedom of services just would have to be forbidden for lines of business like MTPL. And I think that will last not longer than 5 years. So it's a big matter of urgency, point one. Maybe you can comment on that one.
If I may reflect very shortly. Indeed, you are right in saying that FOS is perhaps misused in a way. But I would be the devil's advocate here and say FOS is used the way it is allowed to be used today.
Then the rules need to be changed.
Then rules need to change. FOS, FOE is a grand idea, is a very inspiring concept, but as someone once said, with good intentions is paved the road to hell. So there it's not only or even not so much the problem of misusing the FOS, FOE as perhaps, and I'm just putting this on the table as a potential question, this is not entirely my 100% belief, but perhaps it's a question of restructuring the concept in a way that it cannot be misused.
Yes, absolutely. So we're in common there. I don't know if it's itself or it's the rules, but something has to be done. The second is the disparity which you mentioned on the risk premium needed for domestic losses and the risk premium needed for green card losses for certain countries. I'll give you the most extreme example, that is Latvia. The average premium in 2016 was 40 euro, with a loss ratio of about 80%, so edgy from the profitability. And 1% of the vehicles were not re-registered and were mainly in Britain and Ireland. They produced about 4% of the losses and 50% of all the loss costs, and about 90% of all the loss costs for individual losses exceeding 100,000 euro. Which means every Latvian citizen was paying something like 20 euro for those who didn't re-register the car in Ireland and Britain. Now, what that calls is green cards should have been stayed because of the disparity of the different countries. Yeah? Because if a domestic amount of money needed is so small, and you have to pay such a high premium, there's also a reward of not re-registering your car or re-registering truck fleets
in a different country.
where the premium is the lowest. And I had a very nice personal example. A broker was coming to Cyprus and trying to re-register a truck fleet to Cyprus because the rates there for trucks are very cheap. There isn't even a possibility that this truck comes to Cyprus because there's no ferries anymore. So it is clearly a misuse. And this is another point where we need to be much more stringent in punishing things like this. So if somebody doesn't re-register the car, that is not, oh, sorry, I will do that tomorrow, but that he is fined or has to repay the premium, let's say 1 year back, or some other mechanisms. I'll give you an example, green card, false green cards. My company at that time was working for Alte Leipziger, was having a lot of agencies in former Soviet Union countries, but also Central Eastern Europe, selling green cards. We had a lot of fake green cards. And then it's, oh, we cannot do it on the back of the driver, of the private person, so we have to honor those fake green cards. Only when those fake green cards were no longer honored, we could fight the collusion between agents and those issuing the green card. Because if somebody could get the green card for 10% of the price and still get the coverage, so why shouldn't he do it? So I think there is a lot of disparity here. Maybe from those 2 points in the back, do you have any recommendation?
Well, in fact, other than agreeing with what you say, and perhaps I would be able to give more and more examples. We have, it's not only Lithuania or Latvia, you mentioned, Latvia you mentioned, but you have other countries where the same situation exists. Especially what is really kind of strange is green card premium generated, especially if we're speaking about non-EEA countries, green card premium generated is higher than domestic premium generated. This is, again, a structural, I'm not going to say problem, but it's an indicator of potential structural issues. These kinds of situations are unfortunately a combination of factors, including socio-political factors. And I always say, and we had a conversation yesterday with a couple of colleagues, the moment politics interferes with market decisions, with decisions that have to be actuarially justified rather than politically justified, then we are off to a wrong start. So I think there's work to be done by markets, by associations such as bureaus themselves, by regulators. I believe bureaus and regulators or supervisors have to cooperate much more strongly to prepare the markets, to make sure that the markets are prepared for these challenges. And perhaps the only thing that I would add is, apart from punishing the wrongdoers, also preventing behaviors, preventing mechanisms or legislative constructs that will allow these kinds of wrongdoings, starting from registration of vehicles to up to deregistration of vehicles, because we also have examples of some markets where absence of insurance means automatic deregistration. That kind of takes the burden off of some markets, but it doesn't solve the problem as such.
Thank you very much, and Hayk, for also the comments, especially last one. I mean, the automatic deregistration is maybe one of the possibilities we have. Sorry that it takes a little bit longer, but there's another question. Yes.
I'll be short. Morning. The question is simple. You know that Romania faced 2 bankruptcies in the past. So I would kindly ask, let's say, your opinion about how the Romanian market, from your perspective as COB, dealt with these 2 big bankruptcies which had effect in the whole Europe.
There's perhaps 2 aspects to this question. I was gonna start my answer by, I will be short as well, but forgive me if I'm not. There's the procedural aspect and the financial aspect. The procedural aspect had complications because of, again, cross-border activities, FOS, FOE in other countries. But I have to say, now I'm not the most competent person at the COB with regards to legal and procedural matters, but from the repercussions that we have seen, I believe it was dealt procedurally quite well. All things considered, all of the complications considered, let's say, because this was part of the reason there, and I come back to what I said earlier, part of the reason for this positive track record was the cooperation between the entities involved, both within the countries of operation of these insurers, but also across the borders between the guarantee funds and insolvency funds. So that is one of the reasons why I never tire to stress that cooperation, effective cooperation, is important in cases of insolvency, in cases of FOS and FOE, because there again we have a little bit lack of perhaps cooperation and dialogue between supervisory authorities. As for the financial aspect, it is difficult to say perhaps because the tail is long and fat, but I'm not aware of any special concerns, large-scale concerns at the moment. So all things considered, I think the experience could be considered positive in terms of how these 3 countries involved dealt with the insolvencies. Now, of course, it's a different question what kind of effect that had on the market, and whether the market is today, after having, let's say, worn out their resilience, their resistance to shocks, how well the market is faring today and how well the market is prepared for any other possible shocks. That's something to very carefully be looked out for by, again, the Bureau and the supervisor in tandem, in cooperation. This is my personal opinion.
Thank you.